Hey everyone, hope they're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive right in, take a look, see what's going on today. If you want to follow me, it's at @Finance. And if you want to join our community, finding-value.com, I dive deeper into all these topics, subjects, looking for investment opportunities and sharing those opportunities with everybody in the community. I do that through midweek updates where I go through individual companies through, I release it generally Tuesday night, where I go through and look at all the companies that we follow. And then I say, this is what I'm thinking about them and give my opinions of what I'm doing. And then on the weekend, you guys can interact with me through Zoom. It's a question and answer session, is what we call them. Sometimes I open with things that people want to learn about. So I may open with something going over portfolio allocation, going over um, how I allocate money. Why do I allocate more to company X versus company Y? Variety of different questions, macro, interest rates, all that stuff. If that's something that you're interested in, definitely sign up. Coupon code special. It works for both the monthly and yearly memberships, and you get a larger discount on the yearly. All right, unusual whales. How much is a good salary annually? Of note, the average full-time year-round worker makes 81,515 per U.S. Bureau of Labor of Statistics. And I'm sure it's skewed upwards because they use the average. Because if you throw in very high earning people, ones who make many, many millions in a year, it skews the average up quite a bit versus, say, the median. The median is the middle, which it takes away all the big earners and just looks at the 50th middle percentile of that. But what's a good salary annually? I think it really depends. It depends on how old you are. It depends where you're at in your lifestyle. It depends if you have kids. Depends if you're married and have kids, and if your partner's working or not. Uh, it really depends. It depends if you're getting paid well in a sector that doesn't pay well. So, in some jobs, I would say someone's getting paid very well at 81,515, which is the average full-time worker. That could be a very good salary depending on what you're doing. Uh, on another job, 81,515 is getting an absolutely ripped off. You should be getting paid $250,000. So it's all subjective. And, my salary, it's gone up, it's gone down, mainly up when I was working 9 to 5 at the same company. But my expectations was that I was going to get paid more faster. And that didn't work out the way that I had envisioned it. I thought that people would get paid based solely off of merit and how good or how much value and how well they fit into the company. I thought all of that mattered. But I would say what matters more is how well you get along with your boss and your boss's boss, the ones that basically determine your pay. It's more political than it is merit based, is what I've gathered over the years. It is somewhat a good old boys club or a good old girls club. They turned it into a good old girls club when I was there, where they were just promoting females up, and then the females would grab other females and they just keep promoting. And right, wrong, or indifferent, that's what was going on. So I think it depends. Depends on where you're at. If you're making 81,000 and you're just starting out, that's a damn good. That's damn good pay. If you are towards the end of your career, depending on what field you're in, 81,000 may not be all that great. So it's highly dependent on a bunch of different things: your age, the sector that you're working in, how much education you have, all that stuff. Larry Thompson says, lithium waking up. Yeah, it's breaking a downtrend. This is your double bottom. If you look, there's bottom one, bottom two. These generally occur right at support levels, and we've got a support level going across. So when you see a downtrend, look for support levels that are major, like this one here, and then look for a turn. And if you turn up, then you want to look again here for a potential double bottom. And if you can buy somewhere in this region coming back up, that's a really good spot to be looking to purchase, in my opinion. That's what I did. So I was buying on this right-hand side over here. Um, Even if you were down here, even if you just kind of go, how can I say it? It looks like you're out of control. If you purchased anywhere just underneath this resistance, down in this region, you're probably going to work out, it's going to work out like a bandit if you put in a strategy of kind of cost averaging in, not putting it all in one shot. So yeah, I think this looks good. We are starting to break out, and lithium looks fantastic. If you start to look at some of the individual companies, you can tell that they were bottoming depending on which ones you're looking at. So you don't want to just use one chart. You want to use a group of charts. You can also look at like rare earth metals, because lithium and rare earths, and even some other sectors like graphite and other ones, there's a large overlap between them. So they kind of trade together. So they're very they trade with a high correlation. So if you can see that some of them are starting to bottom, you can somehow get more aggressive in some of these areas. So look out around it too of these sectors. Look around the sectors to see what they're doing, and then draw a conclusion based off of the group of that entire grouping that you're looking at. But yeah, this looks good. Smart Real Estate Bet says next round of inflation in shelter would come from a surge in household demand and a drop off in supply growth, which is coming, the lagged results of rate hikes. What will drive household growth? Usually it's two things. Demographics, they are still strong and we cannot do anything about that, and job growth. In the current environment, there's a third, and it's a wild card that I think will determine if when we see another surge in shelter inflation. Adult kids living at home who finally decide to leave the nest and form households. There is a massive surplus of them. And them deciding to spread their wings in 21, 22 is what caused the last one. It happens again, and it will be a redux. It doesn't look like much of a move in the chart, but there were 1.8 million that moved out in those years, and that is a lot of household demand. I think managing sentiment to keep that from happening anytime soon is critically important, but it is something over which no one has any control over or ability to predict. And this is 18 to 34-year-olds living with parents between 1990 and 2024. So 1990, we were hovering just over, looks like 18,000, which would be, that's in thousand, it looks like. So 18 million at home. And now we have ramped way up to 25 million or 24 million where the current mark is at. That's a lot of people living at home. And if they move out and they decide to purchase homes, well, that could be a lot of demand. This could be all pent up demand that we haven't seen in years before. So a lot of people would say, oh, we can look at 1990 as a prelude. It's like, well, we've got a lot of people living at home with their parents that could move out and be additional demand. But that's the current data. Here's Wolf. He says Lamborghinis are cool unless you need to drive one to work every day. A Rolex is a great flex unless it tells you when your lunch break is over. Oceanfront property is amazing unless you're too busy at work to appreciate it. You don't want more possessions. You want more time to appreciate what you have. I agree with that 100%. A lot of people, they ask me if I were to do incredibly well and make a lot of money in this commodity bull market that I think we're in and precious metals, what would I buy? And I didn't have an answer because I really don't know. I'm pretty content with what I already have. I mean, I don't want a Lamborghini. A Lamborghini says more about the person and what they value versus it's more of like a show off person. I am definitely not a show off person at all. I like if I what I think is a flex is a car that isn't a show off but can beat you. Like it is quick, it is fast, it is fun, and it's kind of under the radar. Uh, I'm not in the flashy stuff, guys. That's just not me. I feel like I don't know. I don't have that flashy gene. I would never buy a Rolex. I don't care about that crap. I really don't. So I don't know what I'd do. I really don't. If I made tens of millions of dollars, I don't know yet. I'd have to figure out what I'd really want. I mean, I'm still driving old cars, guys, and I don't know what's really going to change my life all that much. I guess maybe I would go and figure out. Maybe I'd get my blood tested and see what minerals I'm short. That's probably what I would do. Like in all honesty, I could probably do that now anyway. I don't know. I don't know. I don't know what I do. The dividend dominator says it took me 8 years of investing to hit $100,000. It then took me 1.5 years after that to hit 200,000, and 3 months later to hit 250,000. It's true what they say. The first 100,000 is really tough, but you got to do it. And what I saw in mine, and I talked a little bit about this before, but what I saw in my journey is I saved a lot of money really fast when I was in my 20s. I saved up a lot, and then I had my first kid was I was 32 when I had my first kid. So there's a lot of things that happened in my 30s that slowed down my money going into investments, and I wasn't paying as much attention into my investing during that time. So yeah, I put a lot of money into it. I invested it, but the money I was putting in slowed down dramatically because I had kids. I bought a house. I had more kids. There were some hospital things that I had to cover for the kids and for other things. I would say during my 30s, I couldn't save nearly as much as I did in my 20s. So what I did is I put all the money in when I was single and just, I mean, I pumped it. I pumped in my 20s pretty hard. In my 30s was about kind of building out, I guess, the family there, paying all of the expenses. And, I had premature kids, twins at one point, so they were expensive. And then you have to buy all that stuff, buy a house, um, do all these things, maintain things. So I didn't save as much in my 30s. So I got the big leg up in my 20s. That's where I saved it. I let the compounding kind of carry me through my 30s. I spent a lot in my 30s, saving for a house, buying a house, all those things. And then in my 40s, I'm kind of on the back end of it. So I can now invest a lot more and keep pumping as I was more like in my 20s, so to speak, because the kids are older. I don't need to buy a house. I've locked in very low mortgage rates. I basically kind of planned out my expenses to try to lower them as much as I could through buying a house, refinancing, and doing all those things. So that's I don't know, when people go through their life, that's kind of, I think, pretty normal if you're going to take a path that I chose. See, and a lot of people, they don't save in their 20s, so they kind of get behind the 8 ball. I got in front of it. So that's what not saying what I did is perfect, but yeah, that's what I did there. Logan, another thing, just another thing to touch on here. This guy has been investing in a gigantic bubble too. So when I was going through it, my late 20s, I was going through 2008, 2009, like the big market crash. So when people talk about this, 8 years of investing to hit 100, 1.5 to hit 200, and 3 months later to hit 250, this is during a certain market condition, which is very easy. It's much easier to make money when things are all going up than it was to make money. Let's say he saved 100,000 and then 2008 came and that would have dropped down to 50,000 because I mean a lot of stuff took a big hit. So depending on when you went through that time, I went through it and I was saving a lot of money, And I still saved a lot through 2008, 2009 when things got crushed. So this looks like it's real fast. It could be a lot bumpier of a ride than what this guy's experiencing because he's going through it in basically a melt up. Right now, it's real easy, in my opinion, to make money because everything is going up. In 2008, 2009, when I went through that, obviously I had a pretty big sell off in a lot of the stuff that I owned. It's good because you can buy when things are really cheap. It's bad and it's a little bit harsh to see your account value go down that amount. And again, I didn't know that much back then. I was still pretty new to investing and just trying to learn. Not until it breaks, all employees, residential building construction, still pretty high. It hasn't broken yet to the downside. So things are still holding together. Not saying that it'll be like this forever, but they're still holding at the moment. And this is a big one because generally when you turn, this is what turns before a recession. So you can see it turns, the recession's over here. It turned, recession, it turned, and then recession. This hasn't turned yet. So still looking okay. Don says, are you wondering why Warren Buffett keeps selling stocks and raising cash? Well, here you go. This is the Buffett indicator, value versus historical trend. And look how high we are. We're at basically all-time highs. So each one of these times, you can see in the 60s, we were like this. We were kind of bouncing multiple times here. This is a double top, maybe, in this value versus historical trend. But we are 2.3 standard deviations above historical trend on July 18th, 2025. This is expensive, guys. It's very expensive. It doesn't mean it can't go up. What it means is your risk is high. Your risk down here is when you want to buy. You want to buy it when it's low. You want to sell it when it's high. Right now, conversely, commodities is where you want to buy. Commodities is where you want to buy, and commodities. Every single time in history, if you had purchased commodities here in the mid to late 60s, bought it here in 99, 98, and you bought it here in 2020 and 2025, those are the best times in history to buy commodities and precious metals, bar none, period. So it's not, if you can get over the fact that other people might be making money at a faster pace than you for a short period of time, you got to get over that. Say, okay, you can get the blow off bubble and you guys can go brag about it. I'm going to go buy these undervalued assets, which one, on a risk reward perspective, is the right and logical thing to do. And two, you have asymmetry. So when this does move and you go move and come back down, it is ridiculous how much money you can make. But you have to learn it. You have to get the emotional fortitude to kind of block everyone else out, buy these cheap assets, and just ride this dang thing. This is another one with lithium bottoming. There's the downtrend line, the double bottom. It's right on top of support. This is the way that I drew it because I had the support being just underneath us. And this is a great looking chart. I mean, it looks fantastic for a move higher. Now, it doesn't mean it moves higher, all the way straight up. You might pause kind of where we're getting. You might get a little bit of a pause and a sideways motion before heading higher. Cycle investment strategy, probably the most interesting long-term trade where you can still pretty much enter at the bottom is EWZ or Brazil. Latin American equities are undervalued and overlooked corner of the global equities there. Totally agree. Totally agree. Totally. I mean, 100%. Peter Lynch says, don't buy cheap stocks just because they're cheap. Buy them because the fundamentals are improving. Fundamentals are improving for commodities here, guys. Boom, 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 boom. All these. It's coming. It's coming. All I can say is when this does come, I want you guys to experience what I experienced in 2020. That move in some of the companies that went up 20, 30x is ridiculous. And I think that move is going to come again. And I think it's very soon. It could come within months or years. We can really start to make progress towards that. But that's all I've got for today there. That's where I'm going to end it. So give me a thumb up for the content, subscribe to the channel, subscribe to the website if you'd like. And that's all I've got. So we'll catch you next time. This is Finding Value.